Good afternoon, everybody. Thank you very much for joining us today. My name is Mike Schermbrock, and we will begin the presentation in just a few moments. A little bit of housekeeping items for everybody as some more start getting into the presentation here. Everyone will be muted, so if you have any questions or any elements that we can help you with, please type them into the chat box or in the question and answer area. The session will be recorded today, so if you'd like to, we'll be sending the presentation out shortly after it concludes today to everybody. Once again, we do welcome questions as they come in. I do recommend, though, that as you ask those questions to help facilitate answering you, or if there's some issues and we want to talk to you directly about those answers, I would recommend include your name, maybe contact information, phone number, or email, and we can reach out to you after the fact if necessary. Again, we'll begin the presentation in just a few moments here. All right, welcome. Today we'll be presenting how your bank can capitalize on the pandemic payment trends. Once again, as we go through the presentation today, I'd like to remind everyone that your microphones are muted, but we do welcome any and all questions that you have. Please feel free to type them into the chat box or the question and answer area. And if you could as well include your name and the bank you're with, as well as the best way to contact you in case those questions are best answered after the call today. So those of you who are not aware, Bankers Bank is the Midwest's leading correspondent bank, providing expertise and services to community banks of any size. We focus on ensuring our partner banks have access to cutting-edge technology and programs, allowing them and their customers to thrive. We'll also be hearing from Approval Payment Solutions, often referred to here as APS. They are a mid-sized merchant acquirer based in southern Indiana. They offer a complete set of electronic payment solutions to businesses of every size and type, focusing on community partnerships and a high service standard. Speaking on behalf of Bankers Bank today will be myself, your host, Michael Schermbrock. I've worked with the merchant and card-related products here with Bankers Bank for the past 13 years. Also joining us today will be Todd Kern, Vice President of Faster Payments. Todd joined Bankers Bank in April 2020 and has spent the past 16 years with community banks across the U.S. With a background in checks, core, and card processing, he now leads educating banks on the benefits of real-time payments for Bankers Bank. From the Approval Payment Solutions team, we are excited to have Alan Ngo as founder and CEO of Approval Payment Solutions. Alan has over 33 years of payment industry experience. His command of the sales process, risk management, networks, processors, and channel management experience has provided him with the unique ability to maintain stability while ensuring growth even in uncertain times. Finally, we'll be hearing from Joy West with APS. As Director of Strategic Partnerships, Joy is responsible for financial institution partnerships and relationships throughout the country. She has 30 years of experience in merchant services through a variety of roles, working with companies such as First Data, FIS, and of course, Approval Payment Solutions. And here I will turn it over to Alan Ngo with APS.
Thank you, Michael. So no one could have anticipated what COVID impacts were going to happen. We had rapid acceleration trends that have been seen over the years, an industry uptick in banking and digital payments, but nothing like what we expected this year. So what we've seen is there's been a huge impact in the habits and the nature in which people are going to business. So I'd like to echo this. I'd like to echo this quote. For the last 9 years, APS have witnessed a small decline in retail foot traffic. Additionally, significant reductions that have occurred in the last 3 years with the introduction of Amazon, Target, Walmart.com, but nothing like we've witnessed so far in 2020. These early projections say that online sales are going to be up 42% this year in 2020. The digital acceleration, thank you, Michael. Virtually everyone believed that one day we would eventually become consumed with the digital realm. However, no one predicted the pandemic and the social unrest would accelerate to the pace that we're witnessing in 2020. The digital acceleration is changing the way we shop, order food, pay our bills, and interact with our banks. Technology has been around for years, such as e-commerce, QR codes, and electronic bill pay have suddenly found traction amongst the masses. Some merchants are adapting, recovered, or even thriving by embracing technology, while others enjoy reduced pressure from competitors that did not quickly adapt. So I'm going to review a chart here that's somewhat amazing. Throughout the pandemic, there's been many changes that's happened due to work environment, education of the children at home. These changes have really had a dire effect on shopping patterns and newly found time around the home that has increased landscaping activities, building decks, home remodeling activities, and not surprisingly, the following industries have suffered as well. So looking at the graph above, we see that restaurants is down 48%. While retail is down 38%, automotive 18%, dry cleaning, many won't survive this, down 86%, travel and entertainment, down 91%, daycare, down 27%, automotive repair, 29%, entertainment, 84%, and elective medical procedures, down 57%. So oftentimes when there is a negative, there's also a positive in other industry types. So having reclaimed our work home time, travel time, and not running kids to programs and sporting events every day, we have more time at home. And we find that consumers are spending more time working on landscaping, working on delayed repaired projects, and additionally, many have canceled their home vacation or their vacations that they had planned. And because of this, we have many family activities that are now beginning to spring up that had kind of fallen way to the past. So fishing, hunting, hiking, swimming, camping, boating activity, all are up. One of the biggest increases, ATV riding, is really spiked. In fact, these industries are finding it very difficult to find inventory to sell due to drastic increases. So looking above, the contractors up 81% this year, outdoor motorsports 83%. Hobby and gaming, so we got to have activities while we're at home. 28% increase. Landscaping, 54%. Pool installers, that industry's really won throughout this. 77%. Hardware, 56%. Sporting outdoor activities, 111%. Wine and liquor, to no surprise, 125%. And home electronics up 37%. That's predominantly coming from home offices being set up. So, what we've realized throughout this pandemic is many merchants have adapted early to the ever-changing needs of online presentations or online presence. We have one merchant in particular that has an online digital or has an online oil business, sells olive oil, which what they've done is they've changed due to the shopping behavior changes. They've launched an e-commerce website, allowing them to sell products online, which they'd never done in the past. In the first 5 months of being online, they've now sold just under $300,000 of product. This now has become a long-term strategy to help increase their sales and broaden their customer reach.
So as it turns out, the old dog baby boomers can in fact learn new tricks as well. The COVID crisis has turned the baby boomers into a new class of online shoppers. These shoppers tend to be loyal, and as a bonus, they actually have money to spend. From the merchant standpoint, there are not a lot of options. Online shoppers demand specific service. For example, if a buyer's preferred payment method is not available, studies show that 42% of those shoppers will abandon their cart. Typically, this is a lost opportunity that will never be recovered. There are compelling reasons for merchants to get on board with digital. Big box and huge online stores have created a landscape where American shoppers have great confidence in buying goods and services online. More than 80% of consumers have used their credit or debit card for online purchases. Surprisingly, that's nearly the same amount of consumers who've used PayPal. Nearly half of consumers are comfortable using digital wallets, while bank transfers continue to grow as well. Doing all of the right things that drive shoppers to your website, whether it be AdWord campaigns, social media, search engine optimization, and websites, that's only a part of the equation. The merchant must provide a seamless checkout experience or the sale is lost. Again, there's opportunity to be had for your small businesses. The pandemic will take down already weak or weakened businesses and leave the healthy, forward-thinking businesses to pick up their market share. It seems hard to imagine, but the pandemic is only 7 months old. But in the long term, those effects are very profound. Our research has shown that 45% of the folks who have permanently changed how they interact with their bank. And that number is expected to go higher as time goes on. Naturally, instruments that require touching, such as cash and checks, these are easy candidates for reduction. On the other side, online shopping and ordering, that's only expected to increase. While it may seem obvious to most that payments are going through a dramatic shift from in-person to online, contactless, and using payment wallets as well as other less traditional methods of payments, daily banking functions have also changed for you as a community bank and your customers in ways that most would not have anticipated. As bankers, you've already seen the effects of the pandemic as both your commercial and consumer customers have had to adopt a quote-unquote banking at a distance strategy. Many of you have had to close your branches for an extended period of time, while at the same time, many of your customers have also chosen to limit their in-person interactions. This means that they are much more likely to utilize your drive-through and mobile banking options. For example, there is a fact that we found that 33% of respondents will continue to use the drive-through versus coming into the branches like they used to do. In fact, that same study that was prepared by FIS shows that 31% of respondents stated that they would continue to use more online and mobile banking options than they did previously. Many customers have found that it's just more convenient once they started using those options, and they plan to continue. Five years ago, most business interactions that your customers conducted with you, they did in person, in the bank branch. Even a year ago, businesses came inside the branch to make deposits and withdrawals, apply for a credit card, a mortgage, or other types of loans. They either mailed a check or came in person to make those loan payments on their accounts. While the technology has been there for a while, the adoption rate has seen a huge growth spurt in the actual marketplace. In just the last few months, we have seen a surge in contactless transactions versus the traditional payment methods of checks or cash. And functions such as getting help over the phone or online chatting with customer service have grown tremendously in the retail marketplace. And now your customers are looking to utilize those types of features with you as well. Some of the top functionality that we're seeing banks add to their online banking are applying for a credit card, applying for a loan or a mortgage, making a loan payment, and adding a chat function to their website. Now, in fairness to COVID, there's no scientific evidence that it's transmitted through cash, coins, or even touching a credit card terminal. However, you're going to be hard-pressed to sell that proposition. The anxiety is real, and as such, we're seeing touchless credit card payments experience a boom. The effects are evident. Regardless of the age group, more people are utilizing digital payments. And the key is that that's going to continue. More people will continue to utilize digital payments in the future as well. As is surprising to no one, non-traditional payments have also exploded since the pandemic. It's interesting to me that baby boomers have been some of the highest adoption rates in these new emerging payment channels, as you can see with the mobile wallets. Todd, I'm going to turn it over to you.
Thanks, Joy and Alan. It is a great time for real-time money movers. As businesses become crunched for cash, quick receipt of money will be at a premium. What I want to do is do a level set of the traditional payment rails in the United States and introduce the newest payment rail in the United States in over 40 years. Joy and Alan mentioned the decreased use of cash during the pandemic, but when I talk to friends and family, you can sometimes purchase something at a discount if you're paying cash, buying a used car versus financing it, or you're buying something from a private party. The next payment rail in the United States is debit and credit card, which we refer to as non-cash. Joy and Alan have done a great job doing a level set of the usage during the pandemic, and it's been interesting to see how consumers have worked very hard to pay down their credit card debt during the pandemic. Check processing or check volumes have dropped dramatically during the pandemic as consumers have been unable to make deposits at the branches in person. However, we're still seeing remote deposit growth staying strong. And when I say remote deposit, that's merchant and mobile capture, which a lot of community banks invested in 2, 3, 5 years ago. Wires, still very popular during the pandemic. However, it's a little bit more cumbersome for the customer to verify some information and get that information to their community bank. So wires has been very popular, specifically during the mortgage refinance boom that we've experienced during the pandemic. And then the last payment rail that was stood up over 40 years ago in the United States was ACH. Most consumers are used to ACH because that's how we're paid every couple of weeks. But 3 years ago, the Federal Reserve started the crawl, walk, run approach to same-day ACH, which we as Bankers Bank have seen tremendous growth volume during the pandemic and during that crawl, walk, run approach. Now, the newest payment rail in the United States was the real-time payments network through the clearinghouse, which was introduced and started processing transactions in 2017. The Federal Reserve has announced their FedNow solution for real-time payments, which will come online in 2023, 2024. The biggest difference between real-time payments and FedNow versus cash, non-cash, check, wires, and ACH is the fact that cash, non-cash, check, wires, and ACH settle in a batch mode. Real-time payments and FedNow will settle in a real-time gross settlement model, which that means for community banks, as customers send or receive money, their accounts will be debited and credited in real time, which will make settlement significantly different than what community banks are used to. So RTP and FedNow will move to a real-time gross settlement model. So that's 24/7 by 365 potentially processing on their behalf. Now, I mentioned earlier that the real-time payments network started processing transactions in 2017, and the last newest payment rail in the United States started processing transactions in the early 70s. Since the network came online, there has been steady growth to the processing volume or the number of DDAs that are able to accept a received transaction or a credit push. Community banks started to join the network earlier this year and have seen, again, steady growth of community banks adopting real-time payments. Why are community banks embracing real-time payments? One reason is gig economy jobs such as Grubhub, drive today, get paid today. The real-time payments network is used for Grubhub payroll. Another example is PayPal and Venmo. Community banks are demanding the ability to get paid or get that money out of those wallets instantly. And the ability to get the money pulled out of their Venmo or PayPal wallet on a Saturday or Sunday is a benefit of real-time payments. This slide shows that JP Morgan Chase feels that Square and PayPal at the point of sale are a significant competitor, and by JP Morgan Chase making this announcement in October, they are going to use real-time payments to settle their merchant processing business through the real-time payments network, and again, helping small to medium-sized businesses improve cash flow and liquidity, which has been critical during the pandemic. This is another interesting development that has happened during the pandemic. The Zelle has joined the real-time payments network for not only processing, but settlement, and the initial pilot has taken place between two top 25 banks. But this article from late October calls out how Zelle integration is going to go down market for community banks. And there are community banks on this call that participate in Zelle, and there are community banks that do not participate in Zelle. Whether you do or do not, it doesn't matter. However, the fact that Zelle is joining the real-time payments network makes a difference because community banks can speed up their settlement process by settling through RTP versus batch ACH or debit card rails. I'm going to turn it over to Joy for the next part of the presentation.
Thank you, Todd. So for those who embrace the changes that are taking place in the market, whether it's a commercial customer or a community bank, they will continue to thrive and rise above their competitors who decide to stay with the status quo. Now is a great time to explore and partner with companies that can help you and your commercial customers not only adapt, but thrive in this new normal that we see with COVID and the pandemic. Mike, I'm going to turn it back to you.
Thank you very much. And thank you all the attendees today for giving us a little bit of your time and your attention. Pardon me, of course, now that I need to speak, I can't. This does conclude the main presentation, but once again, we ultimately want to give you some time for some questions and some comments. Since we really have such a fantastic team of expert panelists today, please, as a reminder, to ask those questions, put them into your chat area or into the questions and answers area. And I do also remind you, if you could put your name and how best to contact you, as well as ideally which bank you're with, just in case we have to take those questions offline or follow up with you after today. Just a few moments while we go through some of the questions here. Alan, I think I'm going to give you this one. I'm going to paraphrase a little bit here. So our customers are in small towns and don't have a website. What does it take to get someone like that set up for selling online?
Very interesting. So in actuality, if they don't have a website, they're inching towards closure, right? I mean, today's reality is merchants are buying most of their products through Amazon, Walmart.com, Target, and that's how they prefer to shop. They've proven this. They've made their decision. Many other apps like Uber and Uber Eats and apps like this are controlling the direction that merchants are going in. So in order to get a website, it's very easy. Companies like APS sit down, do an evaluation with the merchant, and what the merchant really wants to do, they want to partner their credit card, their retail site, and it needs to be tied to their website because there's very much a challenge at managing both inventory streams. So having the same payments company handle credit cards retail and credit cards online and build an e-commerce site. A site like that can be built in 2 to 4 weeks depending upon the number of items that's added. It's very easy. We do it each and every day. But it needs to become part of their strategy. Like I said earlier, back to the olive oil company, they've captured $300,000 worth of new sales that they wouldn't have had. And, in fact, if it wasn't for those sales, they probably would have closed down because it was a fairly new business. So, to sign up's easy. The cost is minimal. The launch is very quickly, and the consumer or the merchant has a lot of say in what the site looks like and what products, how their products are going up, and the timeliness of delivery. They have all those say. So it's easy. Like I said, 2 to 4 weeks usually, Mike.
I think you're muted, Mike. You're muted.
Thank you very much. It's how we video conference these days. Here's another one from the group, and I would imagine this might be a little bit of Todd and actually a little bit of APS as well. Do you feel that offering Zelle will give community banks a competitive edge? And Todd, again, if you don't mind answering that first, could you, again, real quickly recap just in case someone doesn't also know what is Zelle and how will that give community banks a competitive edge, or does it?
Thanks, Mike. So Zelle is a person-to-person payments network owned by some rather large banks that has started to offer the solution to community bank or community financial institutions. It's up to the community bank to decide whether or not they need to participate in Zelle. We have a lot of clients that love it. We have a lot of clients that have decided not to embrace Zelle. And some of the banks that have decided not to embrace Zelle have decided to embrace RTP and spend their hard-earned dollars on investing in marketing, whether it's payments, whether it's merchant processing like APS, or more importantly, adopting real-time payments and educating their customers on why they haven't adopted Zelle and how they don't mind using PayPal and Venmo to send money between friends and, buy things, but educating their customers on how to get those dollars that are residing in the wallet into their community bank, which is their preferred bank of choice, and then educating the customers not only on, how to get it in, but the advantages of their debit programs and the other services that the community bank offers. So it's about 50-50, and we see adoption of Zelle all over the board. So again, it's based on the community bank and the feedback from their customer. But I would encourage community banks to look at the real-time payments settlement option associated with Zelle and how Bankers Bank can help, because you eliminate that batch settlement. The funds are in the settlement account immediately, and that makes settlement and processing a lot easier for the community bank by partnering with us for real-time payment settlement. Joy or Alan?
Yeah, I just want to add, Todd, you're exactly right. I think that Zelle is more of a consumer-based product. It does have its purpose. For example, maybe a hairstylist that's operating a DBA that will take money in that manner. I think there's going to be some long-term concerns, IRS concerns with being able to track these deposits. My money would be spent on real-time payments, particularly in the B2B market. That is the growth industry that's out there, and real-time payments is ripe to be able to go downstream to your manufacturers and distributors and offer this as a payment solution rather than taking financing or, financing these receivables or whatever. So I think that would be my first step anyhow.
Excellent. Thank you both very much. We do have another question here. So since it came from Banker, and I've paraphrased a little bit here, can we take payments online? I imagine that means as a bank. Can you take payments? And Joy or Alan, do you mind fielding that one?
Sure. Yeah, I can take that. Thank you, Mike. That's a great question. Yes, we are actually getting a lot of requests from our bank partners to be able to take payments, for instance, loan payments and other types of debt payments from our bank partners. And we absolutely do have a solution. There is a solution out there. And with our particular program, of course, we are in complete compliance because, as you know, you have to take debit cards or an ACH payment. You can't take a credit card payment to make a loan payment. So our program does do all the bin searches, making sure that it restricts those payments to the payment methods that are compliant. It's an easy addition for a bank to do where they can make those payments on their website, make them in person once the restrictions are lifted and people are going into the branches more. But yes, we absolutely can work with our partners and the various community banks to be able to take payments.
Thank you kindly, Joy. So this next one's going to be a little bit complicated. I'm going to combine a few questions here into a single one, and then at the end, let me pivot again here. So first part of the question is RTP available now? Did I misunderstand I thought it was going to be in the future, but not right now? And then the second part of that is, how do you participate in RTP? Todd, I'm going to give you that one off the bat, if you don't mind. Again, and quick synopsis. I know RTP as a whole, it's its own industry, basically, but could you summarize, is it available now, and how do you participate, and what does it look like maybe next?
Yep. So RTP is available now. Community banks can connect directly to the network if they want, or they can partner with a third-party service provider. Most usually would be their core processor. All the major core processors are either certified and have community banks processing transactions on the network. And if they don't have community banks processing transactions today, they will be in 2021. Most community banks join the network initially by receiving credits. So that is the easiest way to join the network, and to participate is to have your customers have money deposited into their checking or savings account. And that is, again, how most community banks join the network initially. And then community banks look to roll out sends in 2021 or 2022, which would allow for the customers to push money to another customer or financial institution to pay for something. And what's unique about, RTP is that settlement method. So most community banks rely on a correspondent to facilitate the settlement of their wires, ACHs, and checks. So this is just a natural progression for Bankers Bank to get into by being the first funding agent live in the United States, settling transactions for a few of our clients today.
Thank you kindly, Todd. And actually, I'm going to pivot a little bit to that related question over to the APS group. Merchant processing is certainly available now, but what does it take to get into it? What does it take to keep it going? What's happening, and sort of what's the involvement to, if you're interested, next steps?
Sure, I'll go ahead and take that. So that's a great question, Mike. And, it's really a simple process. The best way to start is to reach out either to Mike there at Bankers Bank or your correspondent banker, and they will get me involved, or you can reach out to me directly as well, either way. And we'll just go through what I normally do is we go through and we present our program. We talk about the revenue share that you would earn. We have a couple of different programs. We have a referral program where we have our salaried account executives with servicing your bank and your bank clients, both over the phone and in person. And then we also have an agent program where I would say probably 90% of our partners go with a referral because it tends to be a little bit of a complicated, environment. And with things changing and technology changing and payment methods changing, that's not necessarily something that you want to have to deal with on a regular basis, keeping up with all of those changes. But for those of bank partners who do have their own agent program where they have someone internally selling it for them, we also have a great program for them. We actually treat our agent bank partners as if they're one of our sales account executives. We bring them in for training. We've got a great, it's almost a week-long training initial process we bring them in for that. We also, they're on our weekly or biweekly, whatever our product calls, our huddles and so forth that we do with our sales teams. And so we really want to support our partners, whether in a referral program or in an agent program. We've got a great program for our partners, as well as excellent revenue share. And just to kind of throw it out there, we're very competitive. And, even though some of the larger guys, such as Fiserv and so forth, also offer these programs to community banks, our bank partners have found that our program is actually more generous in the revenue share than the big guys are. And we do that for a variety of reasons, but we feel that we want our bank partners to be a true partner in everything, whether it's the revenue share or whether it's, servicing your clients and working with you in the field.
Thank you very much, Joy.
I could add to that. I'm sorry.
Yes, please.
If I could add to that, a lot of banks may have never had a merchant program in the past, or they have one and it's semi-inactive. I want to encourage you to look at merchant processing right now. We're at a really strange time because what's happening, Square's now become a bank, as we probably are aware. They are competing for depository accounts. So I think a lot of banks believe that, well, if I don't sign them up as a merchant, they'll just go to another provider. And that is true. They will go to another provider. That other provider very well may be a bank as well, being somebody like Square, or it might be an aggressive larger bank in the market that's using merchant as an enticement. So we found that the banks that are most successful are those that mention merchant quickly in the relationship, and they create that awareness and that sticky environment, meaning once I have the merchant processing and I have I have a loan and a depository account, that account tends to stay on board much longer. So, one would think that the attrition of you losing accounts would be less likely in that environment. So we encourage you to look at it. Don't just assume that, well, they're going to get hooked up, so I don't need to play a role there. You really do need to, because someone's doing that for a reason. They're probably trying to track your deposit account.
Thank you very much, Alan. It makes perfect sense. I don't see any more questions coming in here from the group. I would like to remind everyone, of course, if you do have some other questions or if you want to ask us anything privately, please do so. Both Bankers Bank and APS, we love questions. We're here ultimately to help you become the best banks that you can be. So if it's anything related to Bankers Bank and bank card products, please feel free to reach out to your correspondent banker or reach out to me directly here in the card department. Again, my name is Mike Scherenbrock, and my contact info there is on the screen. And also, if you have any merchant-related questions, things that you want to bounce past anybody, you can also feel free to reach out to Joy West with APS. Her contact information is there on the screen as well. And with that, once again, thank you so much for attending. Thank you so much for listening and learning a little bit some of the changes we've experienced here in the pandemic. And enjoy the rest of your week.
Thank you, Mike.